You've got some money, maybe a stimulus check, or two, or three, or you're tired of watching your savings sit there making you absolutely nothing as real inflation for food and gas and where you live really increases, and you're tired of losing money to inflation. Or maybe you've watched your friends get in since the market crash in March of 2020, and they've had such phenomenal returns, and you just want to get in on the action.
It's about security.
What is that supposed to mean?
Money!
What are you talking?
He's got a lot of money.
Now I hate you, you
Well, I
slow
hate
bastard.
you. If you leave here, I hate you.
Have
Hey, you
you
if
been
you leave
paying
here.
attention to anything that's been happening?
I
in the
guess
city?
not. I think I must have misread all of those
I
signals.
guess you did.
Today, I'll give you my best investment ideas for the rest of this year, where I'm going to put more of my money to work. Hey, but these are my ideas, my risk appetite, my short and long-term goals. You're going to have to make that assessment of where you want to be yourself, and whether or not what you're looking for is reasonable, or whether it will take a miracle to get there. So tap the like button and we'll get started looking at what's real and maybe for a miracle or two. I'm James Callahan, and this is the Do-Over Show, where we learn to put our money to work instead of just working for money. And it's never been easier to start investing. Never been easier to start investing with so little. And if you're about to make your first trade, your first investment in a stock, an option, or even crypto, you've got a big decision to make. Imagine you were in early. Imagine you picked, Doge when it was 5 cents or 10 cents. And watched it double, triple, quadruple. Well, congratulations. And now you've got a problem. If your first trade was an absolute winning trade, your second trade is going to be a disappointment, almost guaranteed. Hey, but if you pick something and it turns out to be a big loser, or even worse, it goes nowhere, you're going to face the panic, the need to have some kind of performance, some kind of return. And that might lead you to start chasing penny stocks at 4 cents or 40 cents, following some tweet or update on Reddit about how this is going to quadruple, some pump and dump, and they run them every day. And we're suckers for them. Why? Because of the 1,000% return, the exponential upside of something that costs us so little. Or some of us will have a risk appetite for the absolutely most boring stocks that are out there that literally don't move. It's like they're paid not to move. But most of them, the value stocks, also pay a dividend as an incentive, because unless they gave us something on a return, no one would ever put any more money into them. So let's get realistic. The average return on the S&P 500 over the last 20 years has been about 7% annually. So $1,000 invested will get a $70 return annually. And if that is not enough of an upside for you, then you're probably looking for something with a lot more risk reward related to it than just another market tracking ETF.
What do you want? What do you want?
It's not that simple.
What do you want?
And my best suggestion up front is that you get in the habit of writing down the reasons why you are buying what you are buying, what you really hope to get out of it. You don't have to have an absolute exit price in mind or an exit strategy. Some of that will come, but for the most part, getting started means being realistic about what we hope to get out of it. If we say we're going to get 1,000% return out of something that has not moved more than 1 or 2% over the last 10, 20 years, well, then that's an unreasonable expectation. And we can, usually in hindsight, we can see that, we're expecting a little bit too much out of that stock. You can always change your mind later, lower or raise your risk appetite, reevaluate, but start with writing down why you are buying something. And be as honest as you are specific. So I'll share with you some of my best ideas of where I'm going to be putting my money and more of my money to work for the rest of 2021. You can listen in, you can watch to get some ideas yourself, but this isn't a recommendation to buy, sell, or hold any of these things. It's simply a way to see how money can work and how I put my money to work.
Is there a problem? A big one. You don't seem to realize what business you're in. You're not in the burger business. You're in the real estate business.
Now, first, I have a long-term goal of deriving income from real estate investment. And short of owning a rental property, that means that I invest today in REITs, real estate investment trusts, that distribute the great majority of their revenue quarterly in dividends. Today, I'm in Simon Property Group, or SPG, and Realty Income Corp, or O. But I have friends who are interested in the apartment space, so they're interested in APTS. Now my shares of Simon Property Group and Realty Income Corp have increased since I started investing last year, and over the past few months they've gone up even more. But hey, so is just about anything else of value that you put your money into over the past few months. Now, that's not the reason why I put my money into them for this exponential upside, but it's a bonus and it shows me something. It shows me what's working. And when value stocks start to increase as well as paying off dividends, that's a win. And today, with the way real estate is moving in the US, it's a way of becoming involved in the real estate business and deriving income. So I can say that I get some of my income from my investment in real estate. Another idea of mine is to invest in the agriculture sector through supply and transportation like agribusiness, milling, bioenergy, and fertilizer. So I own shares of Bunge Limited, and it is intentionally Midwestern and boring of me. I started investing last May and have grown my position to just over 20 shares in one account. My average cost basis per share is about $36, and I've reinvested my dividends. And instead of keeping me from putting money more in it, it tells me that's where I need to put more money to get a better return. Yes, it raises my cost basis, but it also shows me that I'm putting my money to work in sectors that are working for me. Another good name in this sector is something like ADM, Archer Daniels Midland. And they've tracked the results similar to Bunge over the past year, a 60% increase over 6 months, and they pay a dividend yield today of 2.88%. But you buy into this idea if you like to watch corn grow, because the time horizon is long term. There aren't many breaking headlines as catalysts for the agribusiness. And my third idea for where I'm going to put more of my money to work in 2021 is the opposite of slow. It's crypto. Hey, maybe I just want to be one of the cool kids and see one of my investments featured on the news every single night. I use BlockFi, Coinbase, and yes, I'll admit it, I use Robinhood. And I have positions in Bitcoin, Ethereum, altcoins like Chainlink, XLM or Stellar, and Doge. BlockFi actually pays interest on the money they hold, whether it's in cash or crypto, and you can use a credit card to earn points with Coinbase. I have a link for both, my affiliate link, down in the description if you're interested. My initial investment in crypto was not more than a couple $100. And yes, it did turn into a couple $1,000. And yes, I put that money back to work in crypto. But hey, the risk appetite associated with this is the price you pay for being in the news headlines every night. So if you're just getting started or you're looking for new ideas to put your money to work rather than just working for money, the ideas I've shared with you, that's where I'm going to be putting my money for the rest of 2021. And if it's helped you in any way, could you please tap the like button? Hey, and while you're down there, how about you consider subscribing and ringing the notification bell so you don't miss an episode of The Do-Over Show every Monday and Friday. I'm so glad you found me and I found you. Thanks.